All right. Hello, everybody. Good morning, good evening, depending on where you are in the world, or even good afternoon. Hopefully everyone's having a good start to the week and you had a good weekend. Got a few viewers here, so hello to everybody. Hello, Shane, I see you. Hello, Giggles. Good to see you in the rooms today. So we've got a pretty interesting week ahead. Obviously, a lot of news actually packed into the end of the week with the Fed Chair Powell speaking on Thursday. And we have Jackson Hole Symposium and a few other decent bits of information here. So, of course, Fed Chair Powell will be always an interesting one. Now, we have had an interesting phenomenon going on with Fed Chair Powell in terms of the way the market reacts to before his speech. And that's generally been bullish into the speech and bearish after the speech. Hello, Yuko. Hello, Jai. Hello, MC. Hey, Ryan. How are you? Richie. Good to see everybody here. Yeah, so we've had an interesting kind of phenomenon going on with the Fed Chair Powell, and we'll be talking about that through today's session running into the bell. So I think that's interesting. Today's session, really to give a bit of a recap, we're going to go over a few stocks that I think present decent opportunity over the long term. And I think still are kind of at levels that make some sense. And we'll also be talking about, of course, the stock market as a whole, a bit of gold, a couple of currency trades I've just got set up so I can show everybody some key technicals that you could use in stock as well when it happens, similar to what we saw with Berkshire the other day, and some other stuff there as well. So we'll be doing all of those. Good morning, everyone. Good to see so many people active in the chat. Remember, ask any questions that you have throughout this session. Happy to answer anything you've got. So yeah, Fed Chair Powell on Thursday, Jackson Hole Symposium, Bank of Canada, Gov Macklem speaking, and of course, Gov Bailey speaking as well. These events always do move the currencies. Obviously, the one that's going to move the market's going to be Fed Chair Powell speaking. I actually bought up this. I went to the Federal Reserve website quickly, and I just did a quick thing for speeches of the Federal Reserve officials, selected Chair Powell this year to really where we are right now. And what I did was I lined that up a little bit on the chart. So I just wanted to show everybody this. I think it's a very interesting bit of factual information. These are all the dates that the Powell has spoken, as in Fed. And you can see how the market's reacted generally into it. Notice the days, he usually speaks at the end of a week. So most of the days have been kind of bullish upwards of the event and bearish after the event, with this one being the difference factor. It was bearish during the speech and then went bullish afterwards. So that'll be interesting to see because, of course, today we've got this market coming in incredibly hot. We've got the Nasdaq going super hot and a big rotation into Nasdaq stocks. I mean, wow. It's almost terrifying when you think about a stock split moving a stock so much. But I was looking at some interesting facts about Apple, and I do think that there's a huge amount of retail trade in this. So this will be an interesting one. Thanks very much, Jai. Appreciate that. Yeah, so Fed Chair Powell, usually a bullish effect into his announcements. Always worthwhile checking out that bit of information. Obviously, he has always a bearish tone. He doesn't want to hype up the markets as much as maybe some other people in America do. And he usually is kind of keeping a level head. And he realizes, I think, that the economy is in tatters, but at the same time, they've plugged the hole with, of course, their fiscal policies quite a lot there. Talk about the American stock market. We'll go to the futures quickly. We'll get out of the SPX. Now, of course, you do want to be looking generally at the real market rather than the futures. But the futures are up about 0.85%. So we're up a decent amount of points moving into market open. Where the real interest is, though, it's all about the Nasdaq, isn't it? I mean, it's just been about the Nasdaq through this whole crisis. It continues to be so. So it's gone past the top end of our range now. We had that channel. We talked about the pickup here. That was a nice buy for anyone that got that. Congratulations. Good work. But it's gone past the 11.5 and 11.6. So we had that range depending on whether you went wick to wick or body to body. And now we're sitting at 11,687. I mean, wow. Are we getting 12,000 this week? It's possible. It's possible. Even ahead of Jerome Powell. It's crazy stuff. Anybody in these particular trades right now? You in any Nasdaq holds? Definitely let us know. Always interested to know what people are holding right now. One of the ones that I have, of course, been looking at is Apple, which is now 515. And this stock I've held on and off throughout the years. And of course, I hold it in index plays as well. But this particular stock is just going phenomenally bullish right now. 514 in pre-market. It'd be very interesting to see if it holds that today. Very big move, 514 pre-market. So smashed the 500, didn't even think about it, which is unusual. So usually you would see that find resistance, and it just shows you the kind of interest in this. If we go over to Apple on FinViz, I think this is very telling. Look at the insider an institution owns. So if that's true and that institution ownership, I didn't fully verify this figure beforehand, but I was just thinking about it. I thought, it'd be pretty interesting to see how many people actually own Apple. If that institutional ownership is that low, there is a huge amount of mums and dads and retailers in this stock. EB says he's selling his SPY calls today. No worries. Hey, Amir. Hey, hello. How you going, Mesh? Ryan's got a question. Hey, Tom, I'm wondering, out of every 10 trades you make, on average, how many do you win/lose? So I think it's less about how much you win and lose, Ryan. It's more about your risk to reward kind of ratios. I'll jump into a example here of the Eurocad on the 4-hour and just kind of go through a process of this particular trade. So say like this one here, this is one of those type of trades that I like quite a lot. And it happens, of course, in stocks as well. We have two moving averages hitting each other. You've got 20 exponential moving average, the red one here, and I'll zoom in a bit. And you've got 200 simple. And if the price comes back up to like the 1.6, it's really that level that you want to be interested in, because you've got dynamic resistance, you've got supports, you've got resistance over here that's been now support. And this zone here, if you're shorting off this, the question then becomes, where do I place my stop loss? So I could have my stop loss up here, or I can have my stop loss up here. This is the super conservative stop loss. This is behind the kind of last swing. And you've also got the 50 exponential moving average and around that kind of 1.57 psychological. Now, if you enter that and you take trade profit down at 1.54, let's say, your risk reward might be 2-to-1. So you can afford to trade at a 50% win rate and be quite successful. I generally aim for around 60 to 65% win rate with around 2-to-1 or better if possible. And that's why I usually follow trends. So trends are your friend. And right now the trend has been up, but we've seen that series of peaks, troughs, lower peaks, lower troughs, lower peaks again, and now lower trough. So really, on at least this time frame, the trend is down. And these are the kind of setups that you look at and you always go, yes, that's pretty good. So to answer the question, I like to get around 6 to 7 wins ideally, but I'll take a 5 wins if possible at 2-to-1. There's absolutely no problem with that. A few people in NVIDIA. Now that's a crazy stock for sure. I don't get NVIDIA. I haven't got it since the crypto days. I've picked it up before, but only off the big crashes. I find it very difficult to trade with that. Nate, it's just trend. I don't know the catalyst, but it usually does what now besides no trees grow in the sky. Not too sure what you mean by that one, Nate, but yes, if you're in trend, then you just keep following it. You follow where the money is until the money clearly goes out of the market, and they'll always give you a sign. And like we saw on gold the other day, like we saw on that blow off, we saw the sign, we got the chance out. If you were long gold and you wanted to hold it for a small amount of time, you see something like this. Let's say you're investing in gold, you see a blow off, it comes back to a point like this. You're pretty sure using that fib technique I was talking about the other day, where you go that 60 kind of 1.8 to 78.6 zone, you just kind of find the zone in there. As soon as it starts turning around, you clean it up. It will go lower and it usually goes back down and kind of has that blow off effect. And that's what we're seeing right now. In fact, gold popped before this stream. Gold popped up and faked. Look at that. Terrible. If you're on the small time frames, very hard to trade gold right now. Investing in it long term, I'm sure you'll be fine. Quite a lot of questions coming in here. Let's just quickly answer a few of these. I assume, unfortunately, someone here is trying to short the Nasdaq. Yes, that is dangerous and unfortunately very difficult. It's kind of like shorting Tesla. If you shorted Tesla over the last couple of years, it's been very, very tough to do so. Can we look at the Dow? Absolutely, we'll look at the Dow in this session, for sure. Look at the Dow right now, actually. We'll probably just use the futures because the futures are trading. So the Dow's had a very nice breakout. We'll go back to the top-down approach on the Dow just because it's approaching those all-time highs again. So let's just quickly have a look here. Now, of course, a bit of warning to everybody and just always a thing you want to do. Body closes mean more on the big time frames than the wicks. Always remember that in your TA. Doesn't matter what time frame you're looking at. Body closes, though, will mean more than the wicks. And why is this? The wicks can be the excess part of the market. So if you ever look at the 5 stages of the market, I did a bit of a video on it. I think it's called The Ultimate Guide to Price Action. I did that at the start of this kind of YouTube. If you have a look at that video and you think about it, markets will move in a certain section where there's a huge amount of retail participation in the middle and of course all the other participation, and then they hit like a level and then they excess and go a little bit too far. And during that time is usually where you see the wick. The bodies mean the most. Notice how the wick over here on the left-hand side, and I'll just draw that up, is the same as the body closes here. So just a bit of a lesson, I guess, that'll help everyone out. So yeah, look, US 30 seeing a big movement in here in terms of strong kind of move on the monthly. Look, we've got that 28,000. I think 30,000 obviously is going to be the super key resistance here. Go down to the weekly, have a look what's happened there. We got that strong close break. Remember, body close, even though it hadn't taken out the wicks yet, the body close was the significant part here. We'd already seen, let's put that horizontal here. We'd already seen body closes, wicks rejecting off the body close. If you want any more proof that the body close means the most, check out that rejection there. 2 rejections off that point. Closes through, gives the buy signal, and right now we're at that point where you've got that little bit of role reversal kind of potential resistance. We get through that this week, new high, or at least up to the resistance. This is like the Big Short 2, but this time the crash won't happen. Yeah, look, it's possible that we won't get a full crash. If we actually look at the market, it's not like normal. Obviously, if we look at a heat map on the market, let's do that together. I was actually doing that in preparation. I know this sounds crazy, but the reason you want to look at these things, I've looked at 6-month performance, is just to show how is the market repricing correctly or not. Well, obviously banks and financials should be hurting. There's no doubt. Obviously insurances, and especially these ones down here, I'd be scared of these financial regional banks. They're terrifying to me. They're ones I would not touch. But energy makes sense. That's obviously consumer driven, and right now we're not seeing people outside and moving around as much. Beverages does make sense to a degree with restaurants closed. Obviously restaurant stocks in general getting hurt. Utilities is an interesting one. I guess that's just because of businesses not using, and businesses would be a big industry. But yeah, overall, this is making some sense. I mean, obviously, I knew that Microsoft, Apple, Google, and Facebook and Amazon would do well out of this crisis. Did I think they'd do this well? No. But I did want to talk about Google today because I think Google is the one that's been an underperformer for years. And will they spend their cash? Will they spend their cash? Because that's the opportunity for people missing out in the FANG stocks. Google has been a stock and a company that hasn't done anything really for a long time now. I don't know if everyone agrees with me. Does anyone know what Google has in the pipeline? Have they got anything good going on? Time will pop the bubble. Yeah, it looks like, look, September should be the month if it's going to be the month. That's the general time that is weak. September is generally the time that's weak. I've still got to make a video on that. But usually lead up to election, it looks pretty bullish here. No one really wants a crash. Obviously, I know Trump, of course, would not want to crash moving into the election. So we may see still further strength. This week, though, it seems to be buying a buy into, obviously, Powell and then potentially a sell-off after Powell. Chris Goldman plus 17% shares. Not sure what you mean by that one, but just let me know for sure. This market sucks for people who want to understand why. You'll find generally that is the way markets work nowadays. They've kind of been like that since the start of quantitative easing. But that doesn't mean that you can't find companies on balance sheets that make sense, that go along with the herd. I was looking at kind of an industry over here. I'm not too sure how people feel about this one, but I was looking at the tobacco industry today, and I bought up those because they've got some decent technicals on them. Strong resistance breaks here on PM, and that's nothing to joke about in terms of how strong that level is. That 78 level. And then we also have MO, which is showing pretty strong bullish momentum. So these are both stocks that are a little bit unloved, and obviously big stocks as well. But those tobacco stocks are certainly in decent bullish movements there. Pixel 4a may suck former iOS users into Android ecosystem. Hey, I tell you what, I tried Android. I tried it. I had a Samsung Galaxy S2, and I couldn't do it. I couldn't do it. But I haven't given Android a fair chance for a long time now. Ideally, 65% win rate, 2-to-1 risk reward would be amazing. But you can go down to 50%. Look, some weeks are going to be better than others. Everyone that trades out there, that's for sure. Like if you're looking at trading and you think, oh, I'm going to win every single trade, that's not the reality. Anyone that thinks you're going to win like 80% of your trades, some weeks you may, but over the long term, no way. Oh, okay. So Goldman increased their percentage of portfolio on the SPY stock. It's now 5.53% of their portfolio. So they're increasing it. I think that's probably a symptom of they can't pick the market correctly. They're struggling with the market and picking it correctly. That's probably a big thing. Yeah, so this Apple one's going to be one to watch. As I'm saying, Apple, Tesla, I think they're really good sentiment on the market. And what I mean by that is, we're seeing super bullish movement here, but if these start to consolidate, turn down, either of them shows bearish signals, they will flow through to all the rest of the market. Once they take away support, yes, but the thing is the Fed has not taken away support for a long... they don't usually take it down. Should we all be bullish on the SPY? Look, yeah, you can be bullish. You always should be bullish on the SPY, realistically. You just need to think about the way you're going to hold it. Have the plan. If your plan is to hold it for 10 years, then yeah, you can be bullish on the SPY most of the time. If your plan is to hold it for a week, then you can be bullish on the technicals. But if your plan is to hold it for only a couple of years and get out, that doesn't necessarily mean that it's a good time to be bullish right now. If I tried super trend indicators, yes, there's quite a few different ones. They'll show you trend when trend's really strong. Like right now, they'll probably look okay. They will look okay, but I don't think that they're good long term. They're also very bad for trading, day trading and stuff like that generally. Yeah, but here's a great one. 9 ducks. Thank you very much. Absolutely correct. Bubbles always go higher longer than we think, and then they kind of do even more. Then they even extend more. Apple, biggest bubble in history. Probably not the biggest bubble in history. We've had some big ones. I mean, in terms of pure dollars, maybe, yeah. It is worth more than it was, though. There's no doubt that a lot of people are moving into the ecosystem. Harley, Apple is valued at more than the entire Australian stock market. Yeah, that's pretty terrifying, isn't it? Here's a bit of a list of the big kind of companies out there. Let's have a look at an overview now of the big stocks. So obviously we can see here, PEs currently pretty high. Obviously these do have earnings, so PEs kind of mean something here. PEs won't mean everything in every stock here, but for sure these ones. I'm still looking at Disney. I'm still pretty keen on Disney. We'll bring up Disney in a second. Look at dollar index as well in a second. Yeah, we'll check out Baba as well. So Disney obviously suffering a bit, and this is the perfect storm for Disney. We've talked about how it's quite negative in terms of sentiment. We've got those double moving averages down here. It's pretty decent resistance around the 120 psychological as well, 121. So I still think Disney has the goods, but they're going to take a while to get back online. So it depends whether the market doesn't care about that, getting back online. But long term, I still think this stock's pretty good. Can we take Apple? Can we take Apple instead of the ASX? Yeah, you feel like that right now for sure. Here's a question from Maria. Just wondering how you pick the instrument you're going to trade for the day or week. Do you do market analysis on everything, or do you have your favorite pairs you always keep an eye on? It's a good question. So in stock, I've learned to just be good at a few stocks. So I choose to just be good at big blue chip large caps. And why is that? Because then I have the flexibility to trade them the way I want. If I want to use options, I can use options. If I want to use CFDs, I can use CFDs. If I want to trade huge amounts of money and dollar cost average in, I can do that. So that's why I think I like large cap stocks. Also, it's been proven. Look what we've seen with Apple. It'd be hard pressed to get a better return than Apple recently, or even Tesla. It's technically a large cap recently in the market from a smaller cap stock. So big caps can definitely perform. I had a 20-year chart or 30-year chart of the ASX 200, the Australian market, and large caps outperformed small caps during that period of time. I think it was like 7.8% versus 5%. I like companies with strong cash flow that I believe in. The big thing for me is that if I'm sleeping at night, I want to know that that stock will recover, or that stock has strong fundamentals from the investment standpoint. In terms of when I screen or trade with currencies, I'll just look at like 20 or 30 currencies. That's all I'll look at every week, and I'll just stick to that. And other than that, I don't really trade commodities too much unless it's gold or silver. Oil, I don't really bother with unless it's an extreme event, and soft commodities I skip. So I don't really look at as many as people think, because you can't look at every stock. I actually use the heat map a little bit on the S&P 500 to find stuff. Is there still lots of value opportunities other than tech? There certainly is. This proves that there's a lot of different opportunities out there. I mean, there's still the opportunity in even Berkshire. Still an opportunity there. There's good companies in here that will benefit from a reopening event, benefit from the vaccine. There's still good companies. There's obviously over here, there's still some decent healthcare companies that aren't up that crazily. But yeah, tech is hard. I think Google is the one that I'd be looking at. And the only reason I look at Google is because when you go over a month, I think, look, they could make a good investment here. And this is obviously the super trend that they went into, but every stock looks like this from the tech stocks. So that makes sense. Now, in terms of how hard they've pushed recently, I don't think this is an insane push for Google. There's the daily. So, it was here in Feb, but it's kind of still hovering around the level. It's not an insanely overpriced thing. I just don't think they're very good at maybe even making money from some of their IPs. And they haven't had a good big hit for a while. Who's buying Tesla at this valuation? Traders and psychos. Traders and psychos. You can trade it. You can buy it long because you could just have a stop loss on it. Because the thing is, eventually it blows up. We all know that it can't hold valuations up here without proving it. So what will happen is it'll go up like this, and then maybe even go to 3,000 or something crazy, and then you will have a blow off on it. And you just don't want to be the one caught buying it up here without a plan. That's all. If you're investing in Tesla long term, I think it's very difficult to buy it here. I really do. I know people love Elon, but I wouldn't put my money there. I'd find something else. But if you're trading it, that's fine. Google isn't sexy? No, it isn't anymore. It's a good point. Doesn't mean it can't become sexy again, though. Comparison between the Nasdaq 2001 bubble and now? Yeah, we can have a look at that. So let's have a look at US 100. We'll see whether this one has enough history on it. This does not have enough history on it. I wanted to use the one we were at today, but we'll see whether this one has enough history on it. No, it's probably just there. NDX, is that going to be the one? There we are. So yeah, with the NDX, you look at the rise that it had, and this may look like it's more extreme, and it is to a degree, but just remember the one thing about what happened over here is the companies in the Nasdaq at this point, they didn't even have necessarily track records. I think something like some crazy percentage of them were less than 5-year-old companies. And that's a bit of a tip as well for investing. For anyone that looks at IPOs and wants to invest in IPOs, I have a rule, and I'm pretty sure Buffett has this rule and a few other big investors use this rule. And my rule is this: 5 years. Okay? If a stock has not been on the market for 5 years, I don't care. I don't buy it. I don't care about it. I don't even look at it. Now, I know that means you miss some opportunities of big moves, But why do I do this? Because there are so many companies that don't survive the 5 years as you think they will. They're companies that basically bust up and they go, either something happens where they look in the books and the books look differently, e.g. in Australia, Dick Smith, Slater and Gordon, both basic bankruptcies that have happened in the last couple of years, and they all happened being less than 5 years on the stock market. So I have the rule 5, and I definitely think that's worthwhile thinking about with your long-term investment money. But yeah, when you do these comparisons, you can't really compare the tech boom and bust to right now, because these companies that are pushing it, most of them have been around for longer than 5 years. Also, another good test would be to have a look at things like Facebook and stuff. When Facebook, when Twitter, when Snap, actually, let's have a look at Snap. When Snap came on the market, it came on the market only a few years ago, and then it got busted down very hard, very quickly, because people didn't understand its earnings. It didn't meet the expectations. You look at something like Twitter, and we look, because there will be a lot of good IPOs coming out of this crisis. I think there's going to be some amazing American companies coming out of it. So I think that will be interesting. But look, they come in hot, then they are not so hot, and then they become hot again. Facebook was the same. If we look at Facebook, I remember it got slaughtered after it came out. Facebook came into the market. This is not... Why have I... Oh, I've got so much volume here, it's not going to go rid of it. But yeah, Facebook definitely came in not so hot and then moved up a few years later. Hi, Bank. How are you? Good to have you here. What's that one, Raphael? Oh, concerning your 5-year rule, take a look at, what is it? Meitune Dianping. What's the code for that? You can let me know that code and we'll have a look at it. What data sets do you utilize, or are you all technical analysis? No, I definitely do look at stock. The other reason I pick large caps is I like to take the average of all of the, let's call them the economic monkeys that get paid a lot of money to make calls on stocks. And I like to take that average as well if I'm looking for value. So I do enjoy looking at those things, but I always just consider really debt ratio is a big thing. And I'll also be looking in terms of fundamentals. I mean, you always look at the PE, you always look at the forward PE, you always look at book ratios, all of these types of things. I also like to understand the type of instrument I'm trading. So whether it's traded a lot by retail traders, traded a lot by institutionals, those types of things. Mostly I do sector rotation. So if you're looking at sector rotation, that's my favorite thing to do. See the rotation when people are in things, and then don't buy that. And then as it goes out of favor, go in and swoop in and buy them all. And that always happens. Markets during normal cycles will rotate in and out of the sectors. They'll go hot, they'll go not, they'll go hot, they'll go not. Classic example during this crisis, healthcare coming into the crisis, stagnation after that point, e.g. LiQWYD. Let's bring up LiQWYD, have a look at that. I don't think this stock did any particular... Oh, this is not. This is gold. Was it GILD? There we go. So this stock here went super hot during the beginning of the crisis, into the crisis. Everyone was in it, going crazy. And look at it now. It's probably a buy now. Is it correct, my findings, that Apple is valued at more than the entire ASX? Well, you can put in, I think you'd probably be about right. So if we have a look at the ASX 200, I'm not sure if it'll come up here. But yeah, I don't think total market value is that much. I thought it was like 6 trillion. 9. Is that right? No, that's a Horizon. What the hell is that? 380. I don't think it's here. It wouldn't be, it's not that big. Yeah, it's not as big as you think. And a lot of the banks have also come out of that. So you've got to remember, of the top 200, a lot of the banks like Commonwealth that were once worth $80 billion are certainly not anymore. The way I pronounce Gilead, yeah, or Gilead, yeah. I don't know. I don't hear it in the news. This company. I didn't trade this much before this crisis. Got to be honest with you. I did not look at this stock very much. And why didn't I look at this stock? It didn't interest me. I didn't like the trend. I didn't really care about it. But this just shows you what happens when it becomes not hot. Do I think the odd US dollar will double bottom or continue down? Yeah, it looks like it's double bottoming right now. I actually had that up before. It's a good technical to look at that we can apply to stocks as well. So if we go into the 4 hour here on the Australian dollar, you'll notice that we have this little point here, and we've got the same low, 71.50, around that range, got the intervening peak, and obviously it's pushing up right now. So the way you trade these, and this is just a bit of a tip, every time you ever see one of these, you don't necessarily just buy it off there, or if you do, you take half your order or a percentage of your order. And what you actually want to do is buy when it comes back to the previous intervening peak here. So you buy that resistance, you get the conservative kind of entry, you get a better stop loss as well. And I'll explain this to everyone. So basically, if you go up and you pick up this entry here, the reason this is so great for traders out there and investors is, do you have to have your stop loss underneath this swing anymore? Well, you don't necessarily have to, because you've already got, let's say here you've got a bullish hammer and you buy it, or here you've got a bit of a pickup of an engulfing candle or anything like that. Well, you only have to have your stop loss underneath that particular candle, yet your profit remains still up here. So you might be able to get like a 3-to-1 or 4-to-1 extraction from that trade. And then on top of that, you also have the moving averages generally behind price. So what I like to do is, let's say we had an engulfing candle here. We'll just call this the engulf. And we were buying here, we'd place our stop loss under here, and hopefully we'd also have our moving averages under there. So we can move our stop loss under the moving averages, and then price would have to push through the moving averages, usually a 20 and a 50, and then it would have to go down. It has all that dynamic support. It's got the stop of where it already engulfed off. So much opportunity there. So that's the way I like to trade every single one of these types of patterns. It's something you won't find necessarily on the internet, because a lot of people don't do it that way. Can we look at US oil? Yeah, we can look at US oil. So US oil really remains in the same thing that we've been talking about. Super tight range, obviously getting set. I just go out here, zoom out, $42 still remains previous support. And if we keep going out, there's previous support a few times, 1, 2, 3, becoming resistance. And the longer this coils in this price, the bigger and sharper kind of the pull will be when it gets out of here. So this is getting into a bit of a tight range here. So you could definitely range this up. You could put like a bit of a horizontal line across it and then look for a break, and then obviously look for hopefully the conservative entry. The one thing with these breaks is we already know we can't trust it because of the previous fake out of this level. So I'd be looking at probably a daily to get through. Notice the wick. The wick came through here, could not break above. So therefore the confirmation that you're looking for is on the daily, not on the 4 hour, because the 4 hour already faked out. And this is definitely coiling in this zone. Finding the support here, it's a good area, but you have to wait for the break either way or trade within that range. How many minutes is it best to wait after the market is open before seeing the trend on a stock and jumping in? It's a good question. So it's a bit of a trap. Most of the trade actually goes in at the end of the day. A lot of trade volume goes in at the end of the day from the fund managers. Mostly retailers trade at the beginning. That's why there's a lot of manipulation on it. I would probably be looking more at trading a few hours into the open generally. You usually get that pullback. So let's say it comes out like a Brahma bull and we get the market, it goes like this. It usually has a bit of a cool off. Why does it have a cool off? Well, there's a thing like lunch usually, but also that used to be a thing, not anymore. But before around like that 11 a.m., at least in Australia, you get a point where basically there's a lot of margin calling and things come in. So you do usually have a cool off, and then you have a flow on effect after that. Market cap is 2 trillion. Yeah, I thought it was about 2 trillion. So 1.84 trillion. Thanks, MC. So any positive news in the market? No more than normal. They'll say and they'll spin it a certain way. I mean, if we have a look at the news right now, we check out this news feed, good news feed, by the way, if you just don't have a paid news feed, finviz.com, click on news. Good little kind of picks up the main interesting ones, has a decent amount of blogs that come up as well. So definitely worth checking out. And look, I mean, it's, you know, what have we got? We've got obviously the Republican roll call thing, renominate Trump. That's not really a surprise. Generally speaking, though, if you look at all of these things in all of the news that's coming out, it's just more of the same. Hopes of virus vaccine, all of those types of things. I think more this is the important one, Fed Chair Powell speaking. We spoke about at the start. We talked about how coming into him speaking during the week, usually we see positive activity in the stock market. We'll want to see today hold this level, hold high. And obviously right now we're looking at a 1.12% market move coming into the open. We'll see how that holds. I'll definitely be sitting around. So we've got the bell coming in at 24 minutes. Yeah, we're looking at the Nasdaq right now. So it's completely gone past our level. So we had between 11.5 and 11.6 as a take profit for a trade, more than an investment. Came back down, bounced off that 20. We had that channel range on the weekly here. So very nice 500, 600 point range. It's a good trade. And the trend continues to be up. If we go down to the smaller time frames, I guess that's what a lot of people will be looking at. Look, is there trades here on the 1 hour? Not really. I mean, it's just basically a vertical, but that is what it is. What you're looking for generally, I think, is pullbacks to previous resistances and trying to swing them through. So like here, you had resistance, a nice amount of consolidation. The market came back down, bought off it. With aggressive markets like this, you can play it like that. If that's the way you want to do it, that's fine. So if we got consolidation here, breakout, came back down, pick it up. Engulfing candle, you can wait for that. Wait for the engulf. There's the engulf. Put your stop loss under here, long it up, either long it into the resistance, that's a 1-to-1 type trade, or keep taking it up for a bit to an important number, 11.6 here maybe. You already hit 11.5, take it to the psychological. That's always a good point. Most important European index for you, DAX probably. Yeah, DAX is probably the most important. Might have a look at that a little bit later. I need to probably look at that stock. I'll look at it a little bit later. Ticker A-Run. What's this? Oh, that's not the one, I'm assuming. Go back to Disney for a second. Does bubbles get more extreme as you get to the top? Yes. Yes. In fact, the more vertical and the more crazy it goes, the more likely you're in a bubble. You want to see something similar to gold. You want to see moves similar to gold. So ideally you have, if we go to a daily here, ideally you have massive kind of wick movement up, which I think we've already seen a little bit in the Nasdaq. And then you get those big bullish, usually 3-4 kind of massive day candles. Tesla will also show you a little bit of a blow off effect as well. Big moves, super crazy, and then always that big sell off event. So just like over here, they all work the same. Usually a big gap up. Notice that big gap happens, sell off, big gap happens, sell off. We'll usually have those type of things, and that's followed by usually 1 to 2 or 3 incredibly strong candles. So here we had gap, 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 super strong candles. You knew it was going to have blow off. Check out lumber. I don't know why you're trading lumber, but fair enough. We can have a look at the futures at least. Get rid of that. So lumber's got a big move on it, 3.62%. Everything's green. Look at that sea of green today. VIX is lower. So where's our lumber? Lumber's vertical, isn't it? Yeah. These all sound good in theory, but when you hold these particular contracts for a long time, more than like a day or 2 days or anything like that, it can get extremely costly because they've got rolls on them. Remember, these contracts expire and generally they'll roll and you'll get another one. So lumber's pretty extreme right now. That's crazy. Go to the monthly, find out whether it... Whoa. Wow. I'd be terrified, guys. I'm terrified of this. Freaks me out. Do I trade the DAX with a different strategy? No, I usually trade the DAX. I don't invest too much into it. If I invest into Europe, I usually invest into index funds. And those index funds usually target certain sectors. I like investing into sector targeting. This is vertical, guys. Now, if you say that's gonna, let's come back to this one at some point. Short it now. Oh, yeah, that could be terrifying. Shorting this one, wow. Oh, terrifying stuff. If you want to see how these trade, though, just click out sugar. Look at how bullish things can get, and then obviously the bearish momentum that comes into them. Coffee, similar, bullish then bearish movement. Now it's on a little bit of bullish. Go to the monthly here. I think coffee had a big run on it. There's a big vertical run on coffee, and then the big blow-off event. Now, they all do it the same way. Big bullish movement, followed by a huge sell-off, followed by a few bits of extra sell-off, and then, look, super aggressive buy-up. What do I say? Let me zoom that in. Same thing. You pull a fib of this, 61.8, 78.6, somewhere in there, that's where it turns around again. The blow-off always happens the same way, and no one learns. No one ever learns that the blow-off always happens the same way. You wouldn't dare short it? Absolutely not. Yeah, Cisco is an interesting one in the markets. We'll check that out. We'll also have a look at Intel as well. So Cisco obviously got absolutely obliterated after its earnings report. Notice it hits that resistance, the 48, looking for the breakout. 48 over here, resistance, and then got obliterated. So Cisco is really showing those technical levels before earnings reports. That's why I like to sometimes wait for the earnings report, wait for the cool off a few days later. So usually 1 to 3 days it'll run for. It cools off and it will often come back and test this resistance and give you that opportunity. If you want to buy that kind of cleanup, if it ever goes through, do it with a percentage of what you're looking at. You'll thank me later on that one. It's a good way of doing things. So Cisco got obliterated down at 42. Look, was it lower during the crisis? Sure was. This is a bit of a fundamentals play. I've been reading the report a little bit, seeing the kind of general repricing events that are happening from, I guess, the pros in terms of the fundamentals. You should do your own fundamentals a little bit if possible, but look, have they even updated? Not really. So this ones here haven't updated. I'd be pulling a new report on this if possible and seeing what's happening there. Overall, still very institutional owned. Insider transactions showing a negative, which obviously would have happened before. All of these metrics and stuff, you just want to look at their current earnings, their forward PE, things like that. It's looking very cheap, but I haven't read the full report. I'd be wanting to read it. With stocks, when you're investing long term, you want to be looking at that. In terms of whether 42 is a strong buy zone, it's definitely got a lot of structure over here on the left. We've got 42 resistance, structure around the 40s, and then breakout of the 43. What I do with this is when you have a fall off this big, what I like to do is I like to wait for it to form its structure, and then it might do this for you, okay? It might do a bit of a channel, might form that accumulation. You might see some nice volume in that accumulation. You wait for the breakout of that volume, put it on your alerts for sure, and then when you get that volume breakout, that's when you can say yes. Because they can sit here for a very long time. A burnt stock that's potentially burnt for a good reason, it can sit for a long time. So wait for the accumulation to happen. Wait for the double bottom. Wait for some technical level with volume usually to show you to get back into it. Because right now, have a quick look at probably thinking maybe some Berkshire Hathaway here. Might go for the B. Yeah. So did this a few weeks ago. Talked about how the 214 was going to cool off. This was the earnings report. Now, what did we talk about just a little while ago? Talked about the earnings report, hyperactivity, the sell-off into the previous resistance, moving averages behind you. Yeah. Obviously, make your own decisions. But Berkshire is interesting level at these zones. Yeah, I don't know what this 3690 ticker thing is. Is this thing here? The 10 banger. I've been told it's a 10 banger. I do not know what this is. I know it's vertical. I know it's moving hard, and it's obviously done very well. So you can look at this one if you want to. Revenue rise 8.9%. Well, it's certainly gone up more than 8.9%. Damn. Well, if you're on this one, well done. There's obviously pickups along the line. So here's where you can get into these crazy vertical stocks with trades. Remember, resistance becomes support. Nice structure underneath it as well, which you know will hold. You've got a psychological 200 underneath, so that makes it good. Right now, it's a bit vertical though, so you'd want it to have a bit of hover. Yeah, so that's a bit interesting, that one. FizzServe. Oh, this is breaking out low, isn't it? So there's support around the 94. That has me a bit worried. Break below 97. That's definitely got me worried just instantly with this structuring. So 93, would you buy here? No. You'd probably be looking at this zone. 93, 94. And if it gets through that zone, obviously it would be looking down. Insider trends, 90-day insider selling trend added to FizzServe. Okay. 10% owner reported a sale of 5 million shares. That's not good. That is not. That's not good. Bail and run. Tencent and Alibaba. Now, Tencent I like. I've always liked this stock. I'm not sure if that's actually the coding for it. Yeah, Tencent bounced quite a lot. I've liked this stock for a while, and I've been in it a few times. So, look, I loved it here. Yeah, Tencent's a powerhouse of buying and taking on risk. They buy companies, they buy like all these games, they take on risk. It's a cool company from that aspect. So look, we've got a lot of structure up here. We'll just go through the top down on this. Obviously, super buy up. They've taken on a huge amount of debt over time. There's good buying if it ever did come back down here, the 470 area, just because you had previous resistance, it will act as support, and we have the 20. But after that news today, I believe, when they had good news about the US economy and stuff, basically we've got here a decent breakout. I'd be looking more as a pullback into the 528 and then obviously a take profit at 560. And if you got through the 560 and we do have that kind of move, then pull back into the 560, lightning bolt up, take it long into the psychological 600 would be the way. It did triple top fail, yep. But the thing with this triple top fail is, why did it break down? Well, it broke down because of US government stuff. That's why, look at this volume that came in. Big volume, big sellers. They were scared. But then they've been reassured again. So there are technical plays here. Break of this resistance, come back down, test, could go long again. Tencent have been a great company at taking on risk and taking on debt and using that debt to make more money. So I've been a big fan of them. Barber's got a really nice break here. Series of higher, break coming up. We're going to get the break probably into the market open. We'll leave this one on. Bring this over here for a second. Actually, wait, where do I put that? Put it here. So Barber's definitely breaking long today, it looks like. Again, the same kind of play. You always want to see the break happen, see the general kind of hype and anticipation happen, wait for it to come down, pick it up, and then trade it long. This is a little bit of an ascending here in terms of if you're taking a trend line. You've got previous resistances, really cool, good structure here, good thought process going into the break. So obviously the market has considered this level and it feels that it's fair value. It feels like it's going longer. That's the psychology of TA. Remember, when we're understanding this type of thing and we're understanding the structure of the market, it's all about saying, well, what's this telling us? What is Wall Street doing? What are they actually telling us? Well, they're telling us that they've thought about this level and they believe it's worth more. They think it's mispriced. That's why it breaks through. It breaks through because there's a misprice going on. With Barber, you would also want to have a quick look at what the general consensus of the overpaid people are. I think that's always worthwhile checking out. So they've got mostly they're all upping their ranges recently. I don't know who the hell that is though. These aren't exactly super companies here. But yeah, there's a few 275s and stuff like that. Obviously, there's a little bit of raising going on. Okay, I'll have a look at that stock, Raphael. I'll look at it later. I can't really do analysis on it now. It's just too much to go through, and considering we've got 10 minutes till the bell. Barber has a lot of noise around it. Yes, it does have government risk. That's a good point, Nate. Does the US 500 have more upside? Yeah, long term, yes. Right now, looks like it. The only thing I'm disturbed by is how it's pushing high, but it's not doing it with the whole index. It's not doing it with a fair spread. And that just, as soon as you compare the US 100 is in the Nasdaq, you can see that. So it's really not, oh, this is the stupid one. I didn't want to do this. 1 second. Get rid of that. Go 2 screens. That's what I wanted. Get this light. Bit of a tip as well. I actually prefer to use the dark screens when I'm doing real hard analysis, because white screens, they burn your eyes when you got on heaps of screens on the board. So I actually don't mind dark. It's worthwhile checking out and using dark if you can. So when you look at them side by side, let's put this on a daily, and we'll go this on a daily as well. You can just see that the market here, it's all being driven by these companies. We all know this. We all know this already, but more extreme as of late. And that comes up in that heat map we checked out. The Streamlabs douche. I can. It's a robot thing, actually. I think it's set for a certain time. I'll get better at that type of stuff, guys. Shorting Nasdaq. Oh, you're powerful, Yuan. Yeah, I don't know. It's scary. Shorting up against trend can be very... I mean, people down here, obviously I can see a lot of reasons, especially around this zone. But ever since pretty much it broke past this zone, it's been bullish all the way. You have to see good structure, guys. Always wait for double tops. Always wait for good structure. Blow-offs. Any kind of real sign that it's falling. This was definitely getting close. This was good structure. We just didn't get that close below. Do I think the Nasdaq will keep going up? I think it will go up a decent amount more. It might go up into the election as well. Usually September is weak. September is a weak month. Low volumes coming in usually in September as well. 5 days in a row up. Yeah. It's that is a stat you can use. You can take like a certain amount of days up and average it over time, and usually there'll be weakness after 5 or 6 days. Nasdaq looking like .com 2.0. It's definitely looking like blow off. It's not .com though. We have earnings on these companies. We have real companies being pushed. Then back then, I don't know if you've ever had a look at some of the stocks that were going long. They didn't even have earnings at all. It was crazy. It was really crazy. Keep those questions coming, by the way. Happy to answer any of them. Tesla was falling before stock split. Yeah, look, generally stock splits force a share up because of that hype and anticipation. And then it's buy the rumor, sell the fact, kind of like buy into the Fed, sell the fact of the Fed. That's the general concept. PEs won't make sense during a crisis. They cannot make sense. The market's trying to reprice for 12 months to 18 months in advance. So you'll never, ever you'll never get those kind of things. Can we look at pound yen? Yeah, we can look at pound yen. We've got 6 minutes till open, guys. Get hyped. Monday, big moves. Yes. Thoughts on the APT Zip rocket ships? I'm disturbed by APT and Zip. I thought they were cool. And this is for any American viewers out there or overseas. These are our mini tech booms. Look at our tech booms. Yeah. It's a great stock. So I guess my thoughts were already here. So I had the short thought and obviously the resistance thought. Both ranges the same. So this stock here basically lets you pay for stuff over time if you don't have any money. But yeah, you can see how the risk of crash or crisis or anything like that hits these kind of stocks. Again, they're trades. I think if you're long holding these types of investments, I wouldn't understand the full fundamentals on it right now because I don't do it because this stock hasn't been on the market for a long enough period for me. But yeah, look, I thought it was good back here when it first launched. And obviously the crisis gave it some opportunity. But yeah, right now it's just moving higher, trying to get that range completed, which would be about $85. You cannot tell when a blow-off's going to happen, 9Ducks. All you can do is when it does happen, know how to trade it and know how to interpret the blow-off. But you know the blow-off happens when it does this kind of thing. And then it will always do the retrace, 61.8, 78.6 kind of fib, sell off back into the lows generally. So there are trading opportunities similar to gold and silver recently. Next iPhone is going to be $2,800. Wow. I hope not. I want the next iPhone. I've still got an iPhone X. I haven't updated it. I have not seen a reason to update it. I feel like every one of them is just like, what's the point? Not enough increase. Not enough anything, really. Hopefully it has 5G or something like that. Should we consider Russell 2000 instead of S&P 500 for better long-term potential? Ooh, it's a good question. 3 minutes until we get into the market, by the way. We will check out that pound yen after the market opens. US 2000. Now, it's a good question. Should we consider it? Look, they all have cycles and small caps definitely have a cycle range. What I'd suggest to you is look up after crisis market cycles. I still think we're going through a very similar kind of thing coming out. And look when small caps generally do better. In fact, small caps usually do better at the end of a bull cycle. So that's why usually that's when you see them do really, really well. So small caps do very, very well at the end of bull cycles. Maybe another camera on the iPhone. Make it even more like a spider, yeah? Do you use screeners for stocks? Yes. I did a video about FinViz screener. That's definitely a good one. I use a lot of sector rotation stuff. I can't show you it because it's paid. It's in Bloomberg Terminal, but I cannot show you that. Yeah, buy more shares, less Apple phones. Yeah, look, one of the secrets to success ever is obviously spending less on things that are frivolous. If you can invest, every dollar you invest will pay you off compound over your lifetime, of course. Facebook and Google are still the cheaper tech names. Yes, they are. And they could be overpriced. Absolutely. 2 minutes till open. We'll get on that screener here. Let's load up the old 5-minute charts. See what goes on here. Now, these are obviously the futures markets here. So we'll see what's going on. Pretty big moves. Which sector would you currently rotate to the ASX? Well, just kind of finished up with iron ore, I guess, recently. So right now, yeah, it's a tough one. I think utility is definitely getting a lot of hate right now, specifically. Maybe not fairly. Healthcare just got rotated into the other day. So here we go, 1 minute. Look at that, it's even stronger. Thanks very much for anyone that's been subscribing during this as well. Really do appreciate it. Obviously, it helps me do more of these. I'm planning on doing another 3 weeks of Mondays, every single bell, 1 hour before. So definitely stay tuned for that. JD Evo Bison. I'll check out JD. Here we go. All right. Whew. When you're looking at the futures, it doesn't get as exciting because you already kind of know where the market's going to be at. Let's see. Whoa, look at that Nasdaq. I should have put it on a minute chart, then it would look like a rocket ship. All right, so Nasdaq seems to be kind of pushing higher a little bit there. Higher than even the futures are saying. Let's see if it can hold through as the stocks all open. Are you worried about the bill in Australia against YouTube and Google? I don't really understand that. Somebody said, oh, don't stop making videos the other day. And I didn't really get it. What's it? Is it saying you can't make videos, or is you talking about the fact that the media is supposedly going to get the ability to see how the system works and therefore target better? I guess I have a lot of international audience, so it's not going to be too bad. But yeah, I think it's pretty terrifying that the government is trying to do that. Here we go, pushing a little bit higher. 11.7. Wow, 11.7. Whew. That is hot. Still surprises me every time. Nasdaq pushing high. S&P over here weakening. Just shows you it's all coming into those tech stocks. Yeah. So it is the one about data sharing and big media getting the info. Yeah, I'm not a big fan of that. I don't see how I would stop though. I mean, let's face it. I don't do this for the money in terms of making YouTube videos. I'm just not big enough. The reality is you don't make very much money. I'll actually disclose it soon. I still want to, I'm going to take all the money we've earned so far on the YouTube ads and I'll invest it in a bunch of indices and things, just to show dollar cost averaging. I've been meaning to do it for a while, but I want to get a bit of hype and excitement about a dip, and obviously we haven't seen a dip. I don't care when we invest it really, but yeah, I'd like to do that. So again, S&P weakening, Nasdaq still kind of remaining very, very hot in terms of pushing up. It just shows you the rotation continues to come out of the general sectors and into the tech. Lowest trading volume. Generally speaking, it's around that kind of lunchy time into afternoon. Can I buy the Nasdaq to show everyone how bad it could go? Probably, yep. Think or swim. God, Nate, you got to get off this think or swim, man. Think or swim is not working out for you. I tell you what, it is not working out for you. Everyone else still... You'll still find my streams. I think it'll be fine. I don't know. I think actually YouTube, for anyone that wants to make a YouTube or is interested in those types of things, I think that YouTube still provides you the opportunity to get your voice out there better than other social medias. Facebook to a degree as well. But yeah, some social medias like Twitter is pretty hard, I think. Twitter was years ago. All right, so it looks like this is kind of the moves. Let's have a look at some of the stocks and the movements on those stocks. Let's get into that barber. I want to look at that barber. Oops. All right, so barber did gap up. It seems to be holding it. Remember, there is strong resistance here at the 267. I expect buying pressure to come through there. That is the full 1, 2, 3. As in, we've got the 1 touch of resistance, the 2, and the 3. So Baba certainly on a watch list that you'd be looking at in terms of intraday trading. I think that's fairly strong. Obviously make your own decisions before you make any kind of trades or anything like that. Disney coming in round 128 doing nothing. Okay, so it's still sitting in that zone. I think Berkshire would be interesting to have a look at. Facebook, let's check that out. Up 2.75%. Let's go down to the 1 hour quickly. Decent bullish kind of move here on Facebook. All these stocks are going to be doing all right. Google's got a nice breakout now. This is all-time high again for Google, 1.73. I still think these companies like Google, Facebook, a few of these others, they're going to come into government problems long term. And that's the biggest issue I have with them. Tesla, I'll check that out. I'm always terrified to put Tesla on my charts. All right, so we opened 2.81% or higher than 2.81%. 21.20 open, gapped up. Again, multiple gap up days. Are we about to see this kind of thing? We've already had big moves. So let's see if we can have a big bullish day. I'd love to see like another one of these. Just this huge, crazy, astronomical, like $200-300 up quickly, followed by a big blow off. That'd be cool. US 30, yep, US 30 is always cool to look at. Dow is doing well right now. Nice rotation into Dow. Big companies still paying out. Now, I didn't really answer that question about the Russell before. Is it worthwhile? Oh yeah, I did answer it. The whole thing with the Russell 2000 is you just want to look at stages in an economic kind of crisis and then think about when we get out of that, when the small companies do well. And they're more susceptible to cash flow problems. So usually it's a few years on. There's always opportunity in the stock markets. This actually is pretty much a flag. So the way you're looking at it is you're looking at kind of a close like that. Now, generally flags will be breaks. I'll take this one from the bottom, and that pretty much is going to predict into the high. So yeah, the Dow's kind of looking pretty bullish here. Nice couple of candles coming off here as well in the daily. I'll be looking at the real market, but that is relatively flaggy. Bullish hammer last week as well. Not that that means much. Get a little bit of a wick high. All right, Jai, see you in the Discord. Thanks very much. Are they usually good term long opportunity points? Yeah, they're okay. So the question is basically if you had something like Barber, would I be buying here and saying, yeah, I want to long hold it? Not really. You prefer buying more dips. But if this is all you got, this is all you got. These can be opportunities to buy for longer term. It depends what you mean longer term is. Do you mean it's 3 months? Do you mean it's 6 months? Do you mean it's 12 months? So, yeah, I think that's a really important fact. I would not necessarily long-term invest off a breakout like this. I look for nice dips. And I'm more of a person that would look for this 230 and say, yeah, I'm interested in buying that for the long term. All right, we'll just go quickly back over that market. I'll do that pound yen. So, yep, continues to be the story. Nasdaq up, S&P's, well, still up, but obviously down a little bit. 10-year holds, yeah, it doesn't really matter. Dollar cost averaging is going to be your friend in terms of making sure you're in quality and looking at dollar cost averaging. Definitely check that out. Stimulus payments are a hell of a drug for tech stocks. Yes. Lots of little microtransactions. That's why I was big on game companies. Activision. I hate EA. I hate them. They're the worst. Anyone that's a gamer out there, you would know EA is one of the worst companies ever. But that being said, they've done well. Take-Two, and obviously there's a few others. Every day the S&P goes to the moon. Will it ever go red for even one day? It will. But again, it'll happen when it's eaten up enough money for them to take it away. Yeah, Nate, I think you need a new platform. You need to think about that Think or Swim. Didn't Schwab buy it anyway or something? Charles Schwab? EA is the worst? Yes. Agreed. Look at that Nasdaq. Look at it go. Yeah. I'd almost be super excited. 17. Whoa. Just keeps pushing higher. EA has FIFA? You mean microtransaction box? That FIFA's like microtransaction central. All right, we'll check out that pound yen. Just see if there's any kind of good technical on it. Remember, Forex is a good place for anyone that's aspiring to be pretty good at technical analysis to get more chart time in. Stocks obviously open and close. You've got a lot more gapping. You've got less kind of TA present and a little bit more fundamentals. If you want pure TA, then sometimes it's worthwhile checking this out. Pound yen is looking pretty good off this buy zone. Obviously, it's come back down to body close. Important. Body close is here, 138. Hit that 20 moving average. on the daily. I do like this level for the pound yen. Keep scrolling down through it. This is the main problem right now. It's already bounced multiple times off this zone, and now we've got body closes here, and we've got this being the role reversal point. So if I was looking at this and thinking, oh yes, I'm very interested in it long, no worries with that. But what I'd do is wait for it to get up above here, come back down. Once it gets through those moving averages on the 4 hour, then we can take it long. And the reason why is you're going to have usually that kind of lightning bolt up where it's going to pick up, sell off like it's doing right now, hopefully pick up, get through the 139 psychological, and then have all the dynamic support at the bottom. You'll notice I do the same thing time and time again with this TA, because this is the way that I found works quite well. You get in like this, you take it long, and then of course resistance up here, very, very strong before the 140 psych. That it's pretty clear what I'd be doing there, but I wouldn't just buy it here. There's too much problems with the fact that the market actually came down further on Friday, and you know that they don't call pound yen for the beast for nothing. Schwab bought it, yeah, or Schwab, or however we say it. Pending regulation. I thought they got it done. Someone here says Nine Ducks says highly recommend Fidelity for their research tools. Cool. I haven't checked them out, but definitely do. All right, I think we'll cut it there. Obviously, it begins another day of Nasdaq up and S&P 500 really being pulled by the Nasdaq. We'll have a quick look at the daily here on the heat map. Let's refresh that one for everybody. Check that out. I don't know if it's going to be open because of the delay. It isn't. Check this out when it does open. Probably just going to be another kind of multiple of all of these things doing well. All these defensives up here, healthcare. Still think Berkshire is interesting. I still think the utilities are interesting. Industrials are interesting to me. Tobacco is randomly interesting to me for a trade. And yeah, good luck everyone this week. I hope we start to see maybe a little bit more consolidation and possibly a bit of a dip so we can get some better buys. But right now I think there's value actually in the other sectors. Maybe just don't look at those tech stocks for now. They'll give you heart attacks. When do we sell? When you get a blow off in those big stocks. There's not much you can do about that. Thanks everybody. See you next Monday. See you tomorrow with another video as well. Got a good one. And remember, subscribe, like, do all of those types of things. We do appreciate it. Yeah, I'll check that. I'll write the code down 1 second. I'll use the pen and paper, Shane. I still do the pen and paper.